Hello, everyone, and welcome to the Make Sense with Your Money radio show. I want to welcome you to another enlightening episode. And today you're in for a treat because we're going to be talking about something that all of my clients are always asking me questions about, but I can't answer your questions because that is not my lane. I like to stay in my lane. Just because I do finances, that doesn't mean that I know anything about taxes. And today I'm excited about the show and what we're going to be discussing. All right. But here to make sense with your paper and get in front of this computer. All right. And watch this show because we're going to unravel the complexities and bust some myths and arm you with the tools that you need to conquer tax season. Are you ready? Okay. Let's get started. So, today, my guest, I'm so excited to have her on the show. Um, we did have her on the show last year, but we had some technical difficulties and we wasn't able to get through the show the way we wanted to. And people, wanted questions answered, and we now are doing a part two of the show, if you will. Right,
Yes.
because we never got to answer all of the questions that we did last time. But I am so excited to introduce to you. She's a tax guru, y'all. I'm gonna let her tell you, but she retired from the IRS. Okay, I think that says a whole lot. And I think we would want to hear what she got to say. And I know because I know who she is. So Deborah Brown is going to impart this knowledge to us. Okay, so if you do have any questions, you can type them in, or like I said, you can email them to support@makesensewithyourmoney.com, and I'll make sure, because this show is live and you may not, I don't know when you're going to watch it, and whether it's a week from now or whatever, but whenever you send in your questions, I'll make sure that I get the answers back to you. Okay, Deborah Brown, thank you so much for being on the show.
Thank you for having me, Cynthia. I love this woman. Um, as she said, yes, I did work for the Internal Revenue Service 18 years. I've had my own business for 13 years. So there's a lot of stuff that people don't know that they should know. So if you have questions, we're going to cover some stuff today. But if you have questions, make sure to get them to Cynthia so that we can answer them for you. It's very important because it's tax season now. So it's very important that you get those questions in.
Yes. So I said, okay, let me just kind of gather up some questions that I know that people have. People always call it, oh, Cynthia, I'm not a tax person. I'm not staying in my lane. I know how to stay in my lane. But one of the number one questions, okay, and we have a few of them, is what is the biggest issue that you find with people filing taxes? What is the biggest issues or some of the biggest mistakes that people make when they file
Well,
taxes?
one of the biggest issues I found is that people do not have all of their documentation. It's important to have all of your documentation. Now, whether you're getting a W-2 or if you're getting a 1099 from somewhere other than your work, it's important that you wait until you have everything. Your documentations have to be postmarked by January 31st. That's the law. They have to be postmarked by January 31st. So you should give it at least another week before you do your return to make sure that you have all of the information that you need. Now, if you do it without all of the information, it's not the end all. You can always do an amendment. And I understand that a lot of people don't do amendments, but the rich people do them all the time. When they get caught leaving stuff off, they say, oh, my bad, I overlooked that, and they'll do an amendment. Well, it's not etched in stone, but it is best to wait until you have everything.
Okay. So your everything meaning that all of their 1099s from here and there, and if they forgot something, it's okay to do an amendment. Why do people not do amendments though? Well, us. Look,
Well,
a lot of us don't do amendments, y'all, but a lot.
poor people.
Yeah, okay. Exactly.
Poor people don't do
Let's just
amendments.
tell the truth.
But rich people do them all
They
the
do it all
time.
the time. They do it
Yes.
all the time.
Well, we think that once we turn something in, that's it. Once the button is pressed, oh, that's it, and there's nothing I can do about it. But it's not true. You can always do an amendment. If you find another deduction, if you
Mm-hmm.
find another credit that you are entitled to, you can do an amendment.
And see, that's important. And listen, that's why, you know, it's important who you choose to do your taxes, because if you have to do an amendment and you go to them, they have to do that amendment, right? It shouldn't be no complaining or anything like that. No, the amendment has to be
Well,
done.
if you have stuff that should go on there that's not on there, then yes, you should do an amendment.
Okay, okay.
You
I'm
should
glad
get the
that you brought
amendment
that.
done.
I'm
Yeah.
glad that you brought that up because a lot of people, some they don't know that and they don't do the amendment, and that's how they lose out on benefits. But anyway, so the next question that I wanted to ask is what okay, here's another one. People, for whatever reason, they don't file their taxes in a timely manner.
Mm-hmm.
Why? Why do we always
Mm-hmm.
wait till April 15th past then, or well, wait a year or the next year? Oh, I'm 3 months. I got a client now, and you know, he's like, he hasn't filed taxes in, I want to say like maybe, I don't know, 4 years or something like that. So now he's trying to get everything. Why? Why?
Okay, part of it is this fear that they have of, okay, I'm going to do it, I'm going to do it. And they dread doing it. They have to get paperwork together. And the post office is open until midnight,
Mm.
April 15th, for a reason. If you ever go down there, I actually worked the post office a couple of times when I worked
Really?
at the Internal Revenue Service, and they send people down to stamp
Oh,
the
really?
extensions so that you
Really?
can get it in on time because it has to be postmarked by midnight the
Oh.
15th for you to get an extension. And so sometimes people just like they don't have time or they might have a little fear. There's different reasons why they don't file on time. I had a client one time that told me this is how she goes on vacation. This is how she takes her family on vacation. She'll do it once every 2 years or once every 3 years, and she takes the big refund and then they go on vacation.
What?
But what she doesn't realize
Mm,
is that Social Security
mm,
runs their computer
mm.
with the IRS once a year.
Okay.
That's at the end of the tax season.
Hmm.
Your extension is till October. You have until October to get it in. Social Security has ran their computer with the IRS in May,
Oh my goodness.
and your stuff is not there. So now, when you get ready to retire, you may get little or no money from Social Security. You're not going to get the amount that you're entitled to because you worked every year. You're going to say, oh, well, I'm supposed to get more money. I worked every year and I put it into the system, and now it's time for me to get. But if they don't have a record of it,
Mm,
how can they give you credit for it?
mm,
So, what I suggest for people that do their taxes late, that like to skip a year, you should go to Social Security website, ssa.gov.
mhm.
Social Security website, ssa.gov. Create an account, username and password, and then take a look at your record and see if you're missing any years. Don't wait until you're 65 and try to go back 30 years or 20 years.
Wow.
It's going to be hard to get those records. You need to keep up with it now. You need to check on it regularly. Once a year is good. You don't have to do it once a month or every 6 months, but once a year, you can check and see that everything is there that needs to be there. If it's not there, if it's a year that you filed late and it's not recorded with Social Security, you have to contact the Internal Revenue Service, get a transcript, an official transcript from them, and send it to Social Security. Do not send them a copy of what your tax preparer gave you. Because it's printed up does not necessarily mean it was sent there.
Mm,
So you have to get the copy from the Internal Revenue Service, give it to Social Security so that they can record your earnings for that year and make sure that you have every year on there so that when you retire at 65, you get your correct amount of money that you're supposed to get from Social Security.
Okay, so now I know that that is so important because I have a family member who retired and did not have all of her years recorded. And because of that, she was shortchanged in getting her Social Security benefits because they did not find
Yeah.
a lot of the years that she said she worked, and they said they didn't have no record of it.
Yeah.
So she wasn't really getting that much money for Social Security, and that was very painful because you need
Because
the
she
money.
worked
She
all
worked.
those years, she paid in all those years.
Yes.
But a lot of people don't understand how these different agencies intertwine and work together. Okay.
Mhm.
I got a lot of people that came to the IRS while I was working there that said, I'm ready to retire and I'm missing these years and they need a transcript. And if it's over 10 years, it's not in the IRS computers. If it's over 10
Wow.
years, it's on microfiche at the service center. You're going to wait a long time to get it. You may not get it at all. It's best that you keep up with it while you're working. Make sure that you check your record every year, that your information is there so that when you get ready to retire, you have the money that you worked for, that you've earned.
So they got to do that through Social Security. Got to
Through
check in.
Social Security, SSA.gov, Social Security Administrative.gov. That's where you go to make sure that your Social Security every year is recorded every year so that when I was younger, not telling my age, but when I was younger, Social Security just sent us every year a form that said, this is how much you made, and if you retire at this age, this is what you're going to get, and if you retire at this age, this. But they don't do that anymore because we have to look out for the trees. So go to ssa.gov and make sure that your record is complete. And if it's not complete, this is the time to complete it before you turn 65 or before the records that you're looking for are more than 10 years old.
Wow. Yeah, I hated to see my aunt go through that. My family member, it was disgusting.
Yes,
So
it's
I
hard.
understand.
It's not easy. But
Yeah,
if we knew better, we would do better.
we could do better.
So I'm telling you now,
Mm-hmm.
make sure that you check on your Social Security record and
Yes.
keep an eye on it.
Yes.
Once a year.
Applied
It's not a
knowledge.
lot.
Yeah.
Yeah.
Applied knowledge. See, that's something that's simple. You got to apply this knowledge
Hmm.
because you can't put it by the wayside and say, "Oh, I'm gonna do it," because when you do that, it turns into a year and then another year, and then it's not good. It's not good.
But they're gonna do better.
They're gonna do better.
They're gonna do better because I just told them they didn't realize that before.
Okay.
You know.
So talk to us about this gig economy.
Okay.
What is the gig
The
economy?
gig economy is something new that came about because of COVID and people staying home. So now they have groceries delivered to them.
Uh-huh.
Now they have food delivered to them. Um, People that get a 1099 NEC, non-employee compensation. That's what the NEC stands for. 1099 NEC. So you work for someone, but you really work for yourself. That's what non-employee compensation. Because if you worked for them, they would give you a W-2 and they would take out taxes and everything would be fine. But when you work for yourself, they don't take out taxes. So anytime you do anything where you're going to get a 1099 instead of a W-2 and you are working for yourself, you should be paying quarterly estimated taxes.
Mm.
At the end of the year, when you do your taxes, you're going to get this big bill that you owe for the federal or the state. Well, it might be a small bill, depends on how much you work, but you're still going to get a bill. You don't want to get that. What you need to do is you need to pay quarterly estimated taxes. And more important than the bill, the government uses our taxes to do certain things. They pay government employees like our military. They offset transit. They pay our doctors and our teachers. And these people can't wait until the end of the year for them to get paid. They want to get paid every 2 weeks because they have a house to run also. So we're on the pay as you go system. That's the way our country is set up. We're on the pay as you go system. So if you're working and you're getting a W 2, your taxes is going to come out every week, every 2 weeks, once a month, however you get paid. You will have your federal taxes, your state taxes, your social security, your disability, all of that stuff comes out as you're working. If you're a gig worker, you should pay quarterly estimated taxes. And that's your, not only your federal and your state, but also your social security, also your disability, all of that stuff you pay through your quarterly estimated taxes.
Wow. That's good.
Pay as you go system. That's good. That's what they call it.
Oh wow. Okay. Okay. That's good to know.
I always tell people I've been trained by the best. I got all of my training directly from the Internal Revenue Service, wow. And they train their employees. I'm gonna tell you, a lot of people beat up on the IRS, and I understand that, they don't actually understand what goes on there. But one thing I can say about the Internal Revenue Service, they train their employees.
That's good. Mm-hmm. That's very good. There you go. I bet you people didn't know that all of that is paying the teachers, the veterans, the army, that they don't.
Yeah, a lot of people don't know what their taxes go towards, right, because there's so many different kinds of taxes. This is income tax. You're paying tax on your income, but there's also sales tax. There's also shipping and embargo tax. There's a lot of different taxes. But right now, we're talking about income tax. We're talking about paying tax on your income.
Excellent. See, y'all, excellent. That's why I love it.
And all of this is public knowledge. All of this is, you can Google any of this stuff. All of this is public knowledge.
Wow. Wow. What do you say to expenses that, okay, my question is I think, we did talk about amendments, right? Did we talk about amendments?
We talked about a lot of stuff. We probably did.
Okay, I'm not sure. All right, child tax
credit. We have done other podcasts. So
yeah, I don't know.
Just in case we haven't talked about amendments, let me just say this. A lot of rich people amend their taxes a lot. If you watch MSNBC a lot like I do, you'll see that when Trump was president, his son-in-law, Jared Kushner, he was forever amending some paperwork that he had to turn in. They said, well, did you work in this country? Oh, I forgot, my bad. Let me just amend it. I don't know why, for some reason, poor people don't amend their taxes. They think once that button is pressed and it's gone, that's it, and there's nothing else I can do about it. And you find later that I bought this refrigerator. I have a house. I bought this refrigerator that's energy efficient. And I didn't know when I did my taxes that energy efficient appliances you get a credit for. You know what? Amend your taxes. Okay? Amend your taxes. What I will say is that, especially with the energy credit, make sure you know the criteria prior to buying the item, because you can get a credit for energy efficient things in your home: windows, doors, refrigerators, washing machines, electric car. You can get a credit for that, but you have to meet the criteria. So look into it first so that it's more than just keeping the receipt. there's certain standards that it has to meet. So you want to look into it prior to buying the item. And you can find that information at www.irs.gov. www.irs.gov. I love giving homework. I give homework all the time. So this is your homework. You're going to go to that site and you're going to type in the search box whatever it is that you're looking for. If it's gig economy, if it's energy efficient credit, you're going to type that in there. They give publications free, publications that they will mail to your house free of charge. You can look all of this stuff up. You can have the information right there in your hand prior to buying the item so that you know that what you're purchasing is actually will get you the credit that you're looking for.
That's excellent. Okay, this is a big one because a lot of people are in trouble with their taxes. Actually, again, I have another client who is in trouble with her taxes and she hasn't filed in I don't know how long. And you watching TV and you get this commercial, fresh start.
Oh, oh my goodness.
Tax relief, fresh start.
Cynthia, I hate
talk to us about
hate
it. Come
these
on,
people.
Enlighten the people.
I hate these people. I hate these people. And they prey on the fact that you're desperate, that you don't know where to turn, you don't know what to do, so you're going to give them $5,000 for them to do an offer in compromise. That's exactly what they do. There is no fresh start program. It does not exist.
Wow.
But what does exist for the federal and the state is something called an offer in compromise. Okay. And I'm going to spell that for you just so that you get it right. It's OFFER dash IN dash compromise. COMPROMISE compromise. And what that is exactly like it says. You are making them an offer. Now, there's a lot of different things that go into whether or not they're going to accept the offer. If you are 80 and your wife is 85 and you're living on a fixed income and you both have health issues and you owe the government $100,000, chances are they're not going to get all that $100,000. So if you offer them, listen, we got 10,000. Can you just take that and just wipe everything clean? They may do that because the chances that they're going to get all of that money is slim to none. Now, if you're 25 and you inherited like so much money, this huge estate, and you got to pay all of these taxes, and you have a good job, and are they going to accept your offer? Maybe not, but it won't hurt for you to put it in. You won't be no worse off than you already are.
That's right.
And you don't have to pay $5,000 for somebody to do it. All you have to do is read.
Go ahead now. Come on.
Now. We can all read. If you won $1 million in the lottery, you'd be able to read that letter, right? So just listen. Make yourself think, okay, this is my lottery. Go to the website, www.irs.gov. Again, put in that search box, offer in compromise. Pull that form up, take a look at it, print it out. I have to have stuff printed in my hand. I don't like to look at it on the computer. Again, I'm telling my age, but it's okay. I print it out and I mark it up and I highlight it and I use my red pen and I play with it and I have fun with it on that sheet of paper. Just go there and do that and save that $5,000.
That's excellent.
Yeah.
That's excellent. A lot of people spend a lot of money with those people. Actually, a family member of mine called me and he let me know that's who he was dealing with.
I had a client that he's a little older He's starting to get Alzheimer's, but he's at that stage where he knows he's starting to get old. So he won't do a lot of things without consulting. And someone approached him. They wanted him to let them help him get out of debt. And he had me and his daughter on the phone when he called him. He said, "Wait, before I make this decision, I want to just have some people run it by." And the gentleman, he got on the phone and he said, "Can you tell them exactly what you explained to me?" And he did. He said, "We're gonna help you, get out of your debt," which is not really a lot of money. I think he owed like about $30,000 or something. Yeah. But they said, "Oh, we're gonna help you get out of this altogether." And I asked him how was he gonna do that, and he said, "Oh, well, we're gonna do an offer and compromise, and if they don't accept his offer, then we're gonna set up a payment plan." And I said, "A payment plan?" And I said, "And how much is this gonna cost?" They wanted to charge him $3,000. They wanted to charge him $3,000 to set up a payment plan. I said, I don't think so. I don't think so.
Do yourself.
But it's nice to know. Thank you very much. Thank you for the information.
Right.
But hang up the phone.
That's right.
Hang up.
Exactly.
Thank you. Thank you for your time. Hang up.
These are things that we can do on our own.
Mhm.
Wow. That's good. I'm glad that we had a chance to share that, because when you said, I was like, whoa. And they really amping up the commercials, because this is a time
And they're trying to scare you. They tell you stuff like the IRS is hiring. They're hiring and they're coming after you. And they want your firstborn, and they're gonna take your husband from you. And the IRS is hiring. But if you listen to MSNBC, they're going after the wealthy people. That's why they don't want it to happen, because they don't want to have to pay their fair share of taxes. When they tried to go through Trump's taxes, it was so much. When you have all of these companies and you have all these different diversities in different countries and is so much, you got to break it down for a number of people to actually go through. When you have one job and 2 kids, what are they going to audit? Come on now. Really?
That's right.
They're hiring people to go after the millionaires that's not paying their fair share. That's people that are saying their business is worth $5 million so they can borrow that from the bank. And then the next day, when they have to pay taxes, it's only worth $1 million. Those are the people that they're going after. And that's why it's important to listen to exactly what's going on in politics.
Yes, it is.
Because it affects your taxes.
Yes, it does.
The taxes are regulated by Congress. How many of us know who our congressman is? Raise your hand if you know who he is. Taxes are regulated by Congress.
That's true.
I'm just saying.
A lot of us don't know, but it's time that you know.
It's time that you know.
To know, because a lot of these things that are getting passed, we need to hold them responsible.
It's time that you know.
Okay. Okay. I hear a lot of talk about the child tax credit. People think they're getting more money this year. Oh, they're getting
on the child tax credit. Oh, unfortunately, I hate to be the bearer of bad news. Please don't kill the messenger. But the child tax credit is going back this year to the normal $2,000 if you qualify for it. It was raised because of COVID. And for the first time, they gave advanced child tax credit. Remember when everybody got the $250 a month or the $300 a month from July to December? But then at the end of the year, you got that letter that said you had already received the $1,500 and you had to put that on your tax return, right? That was the advanced child tax credit that you got the rest of it when you did your taxes. Okay, so it's important to listen to the little words when somebody is giving you something. It's important to listen to the little words. So now it's going back to where it was. If you are eligible, up to $2,000 per child, there are there are refundable credits and there are unrefundable credit, non-refundable credits. There's two types of credits: refundable and non-refundable. The child tax credit is a non-refundable credit that will lower the amount of tax that you have to pay. I will give you an example. If you made $50,000 and your tax is 10%, this is just an example, and your tax is 10%, which means you should have paid $5,000, and you have a child under the age of 16, and that child entitles you to child tax credit, the maximum of $2,000, then it will lower your taxable income by that $2,000. Okay, the amount of tax that you have to pay. I'm sorry, it'll lower the amount of tax that you have to pay by the 2,000. So instead of paying 5, you'll pay 3. Okay, which in turn means you'll see a bigger refund. But once that child turns 17, you won't see that bigger refund anymore. Okay, so the child tax credit is a non-refundable credit. They'll use it to lower the amount of tax that you have to pay, but they're not going to actually put it in your hand. The earned income credit is a refundable credit that they will actually put in your hand. That's why a lot of people want to borrow other people's kids to get the earned income credit. Do not do that. That is not a smart move at all. There are 5 criteria for you to be able to claim someone as a dependent. One of them is that they live with you, that you pay more than 51% of their support. You have to be able to prove this stuff to the Internal Revenue Service if they ever pull your return. And people think they went after me for an audit. That's not how audits go, honey. That's not how they go. They'll pull every 25 or 30, they'll pull one. Every 25 or 30, just to make sure that the tax law is clear, that people understand that they're doing it correctly. They're not pulling it because they calling you out. No, this is the way it goes. Every 25, 30, they'll pull one, just to make sure that the tax law is clear and we're doing it correctly. I worked there for 18 years and I got audited. They pulled my return one day. I don't think I ever told you this story.
No.
Yeah. I was downstairs on the first floor and walking with a client, and my phone rang, and it was an auditor, and they were asking me about my tax return. And I said, I'm sorry, where are you located? And she said, 625 Fulton Street. I said, on what floor? She said, the 3rd floor. And I said, I'll be right back. And I went upstairs with my phone and I stood over her desk. I said, would you like to talk to me?
Oh, wow.
But it happens. It happens.
Wow.
It happens. She was a new girl. I didn't know because I knew everybody else in the building. I went to my girlfriend and said, who's this? Who's this Lisa person? I don't know her. She said, oh, that's the new girl in the back.
Wow.
I said, okay.
So they do it randomly.
It's random. It is not. They are not coming after you.
Yeah, people think that they're coming after them.
That's because they have a guilty conscience. Don't do anything wrong.
Taking kids.
That's right. Taking other people's kids. Don't do that. Don't do that.
You did 2 criteria. What's the next 3 for the kids? If you can have somebody's kids.
Let me see. They gotta live with you. 51% of support, relative, some kind of relation.
Oh, okay. You can do
like son, daughter, that's weird. Like if your mother-in-law, remember I was telling you, if you divorce your husband, you don't divorce his family.
Oh,
You can
okay.
still have your
Right.
mother-in-law on your form. You might still.
Right. Okay.
Yeah.
Okay. Okay.
Um,
That's cool.
so relation, what is the other thing? Oh, and the child didn't make over a certain amount of money. I think those are the five. Yeah. But
Okay.
it's in the free book.
Oh, and that free book.
www.irs.gov.
Yeah, people need to know that.
Yeah.
That's big,
Yeah.
especially in our
That's
community.
from my training. They give us the publication method. When you come into the IRS, whatever they tell you, they have to back it up with the publication, highlight it, and give it to you on the way out the door. You can sit in your living room and just go there and just click on it, or you can call if you know what publication you want.
Wow.
The number is 1-800-829 FORM.
Oh.
829 is tax on the phone, TAX.
Oh.
1-800-829 FORM. I think it's 83 something 373 or something like that. Yeah. But it's FORM. If you know what publication or form you want, you can call up.
That's good. That's good. Information is there, but people
They don't know. They don't know where to find it. They don't know, and it's free.
Free information.
Mm-hmm.
So avoid all of the other things that people go through, the fear, I shouldn't file, didn't file, I don't know. You can amend, all of these things, it can eliminate. Here's another problem. This is a big problem.
Mm-hmm.
Single.
Ah.
No kids. I know because I went through all of that.
Yeah.
Oh my goodness.
Yeah. Well, unfortunately.
Come on now, help us. I got to be something that a single person can do.
Unfortunately, single is the highest tax bracket. Is the best tax bracket is married joint. So if you're single, you can't get married and have kids. Or when you fill out your W-4 form, your withholding form for the federal and the state, there's a line on there that says additional money, if any, that you would like us to take out. You could take out maybe $10 or $15 extra for the state, maybe $20 extra, $25 for the federal, so that at the end of the year, you make sure that you don't owe any money. Because single is such a high tax bracket. Sometimes, even though your employer takes the taxes out for you, it may still not be enough. And at the end of the year, you may still have to owe something. So to avoid that, just take an extra $10 or $15. A lot of people don't even see that line. It says additional money, if any, you would like us to take out.
And that'll help towards the end of the year. So, because you'd be like, oh, Cynthia, every year I end up paying. I don't understand. I pay too much. Blah, blah. I don't know what to tell you. I stay in my lane. I'm not a tax person.
Well, when they say that to me, what I usually do is ask them to bring the return, and I sit down and review it with them. Because a lot of times when you go to H&R Block and Jackson Hewitt, and they sit behind the computer, they ask you a lot of questions. They like a mad scientist, and then they hand you the paper. They don't explain it to you. You don't know why, and it's usually a really simple explanation. Maybe you didn't have enough taxes come out from the job. Maybe you had some income that wasn't taxed. It's usually something that's really simple. So if you just sit down and go over it line by line and take a look at it, you can usually work that out. But it's really important to pay taxes.
Okay, so here's my question. Okay, so I'm single, right? Well, I'm not single, y'all. I'm happily married. But anyway, let's just say I was single, and this is something that I used to do before I got married. This is when I was working corporate many years ago. This is like 20 years ago before I started my own business. And I was single and I had no kids. And I was just putting all of the dependents so they wouldn't take out that much money on me. You know something.
Yes, I know that. I know that.
The max dependent so they don't take that money out.
Yeah, you put 99 and they don't take anything out.
They don't take anything out. Yeah. I wanted all my money. Oh, somebody. I wanted all my money.
I know somebody that did that. It's like 99 for 6 months and then zero for the other 6 months. And in their mind, it worked out because they took out the max and then they didn't take out anything. No, the best thing for you to do is just do the single and have an extra $25 come out for the federal, maybe an extra 15 for the state. And yeah, that should help you out.
Let me ask you a question.
And have a good budget.
A good budget.
And have a good budget. Yes, you need
Why
a good
you say
budget.
That? What do you mean a good budget? You mean in terms of
so that you don't have to play with your withholding. Budget your money.
Okay.
So that you don't have to play with your withholding.
Oh, okay. I got you. Okay. So you have to put all them kids there that you don't
Exactly.
have. Okay. So can if they were like had maybe a side business, that could probably help them as well, right? Maybe if they had a side business.
If you have a side business, then that's income that may or may not be taxed. So you may have to do the estimated taxes on that side business.
But it'll help you lower your taxes, won't it? I'm thinking help you lower. I don't know.
You're making more money. How is that helping you lower your business? Lower your taxes? If you're making more money. If you have a side business and you're making more money, then you should do estimated tax on that so that you don't have to owe at the end of the year.
I'm thinking deductions. You get more deductions, it'll help you, no?
What are you going to deduct? Unless you have a house, or if you're self-employed and you have deductions on the self-employment.
That's what I mean, something like that.
Okay. And let's be clear on the self-employment. Also, there are criteria. You can't just say I'm self-employed and like I work all over my house. I have people that say, oh, I'm self-employed. I work from home. But like me, they have their pajamas on. They're sitting on the bed. They're watching TV with their laptop. No, you have to have a dedicated area that's just for your business. I have a Mary Kay woman that has a section of her basement. That's all she does in that area. She doesn't watch children. She doesn't do dishes. All she does is Mary Kay in that area. So you figure my house is 100 square feet, and this area is 10 square feet. So I get to take off 10% of my lights, my gas, because this is my business in my home. And there's a publication for that. It's business use of home, and it's free. And there's also one, starting a business and keeping records. That's a very good publication to have if you're starting your own business. Starting a business and keeping records. You should get one from the federal, and you should also get one from New York State. Their publications are free as well, because the state has a different criteria than the federal. So you want to be in compliance with both. So you want to get both of those publications.
Wow. That question right there. See, that was good, because that's it. I know that was something that I used to hate paying. I mean,
Yeah.
It's single because, but I like what you said in terms of, because then you don't feel the hit.
Mm-hmm.
If you do $15, $20 per paycheck, you're not going to feel that.
Exactly. But when at the end of the year, when you get this bill for $1,500, and then they're gonna add penalty and interest because it's not paid on time, it's gonna feel different. It's gonna feel less different than $20 a week or every 2 weeks.
Every 2 weeks.
Yeah.
So just go ahead and do it once you fill out your paperwork, or if you're already working on a job, you can go and ask for that W4. W4.
And the state withholding form, yeah.
And they can
that's
look
for
the
that federal
box.
Mm-hmm.
All right, y'all.
And it's important. Taxes are important. Once you know what you're paying for, I think you'll be more. You wouldn't mind paying so much. I went to visit a friend of mine in Virginia, Richmond, the state of Virginia. We were going out, and she said, "Oh, wait a minute. and jumped out the car and ran back in the house and threw something in the trunk that looked to me like the big black garbage can bag that she had in the garbage, the black bag that she had in the garbage can in the kitchen. We had just eaten dinner in it. And I said, when she got in the car, I said, did you just throw the kitchen garbage in the trunk? And she said, yeah. And I said, well, why'd you do that? And she said, oh, the place that we go into, I'm going to pass the dump and I'm just going to throw it in there. I said, pass the dump. Virginia doesn't have sanitation like we do.
What?
They don't have they have to either pay for private sanitation or they have to take their own garbage to the dump.
What?
I couldn't believe it. I asked my other girlfriend that just moved down there.
Oh, I gotta ask my friend. She's in the other.
I asked her, I said, girlfriend, y'all don't have, she said, oh, I just left New York and I'm glad I brought my shopping cart because I put my garbage in the shopping cart and take it down to the city dump. I said, oh no.
In the restaurant though?
In New York. No, she moved from New York to Virginia.
Okay.
And I called her to ask her because I couldn't believe that they didn't have sanitation. She said, yeah, we got private sanitation if you want to pay for it. But we don't have city sanitation. That's why I said you have to know what you're paying for. If I sit my mother in her wheelchair on the sidewalk on garbage day, when I wake up, my mother and that wheelchair will be gone. Okay? I put everything out there. Refrigerator, garbage, mats. I put everything outside because I know what I pay for.
Exactly.
And I make sure the dog and the cat ain't out there because I'll come back and they'll be gone.
That's right. They take
I know what I pay for.
Wow.
And I do not mind paying taxes because I'm not taking my garbage down to the city dump.
But you know why? That's because you're on the other side and you know.
Yeah.
Knowledge. That's why knowledge is so important.
Yeah.
People don't like paying taxes.
Because
just
they don't know what it pays for.
Nah, they can't stand paying. They don't like it. I'm telling you, I had both hands up. That was before I knew what I know now.
Yeah. Yeah, they don't know what it pays for. When your child has an asthma attack in the middle of the night and you rush him into the hospital and they got to see him, whether you have insurance or not, that's your tax dollars.
Yes, people they don't equate that because people they live in their own world. They have their own stuff they're dealing with, and it's not until you know run across somebody like Deborah or myself or you know on the internet, and you know some people don't like to read, but anyway, but you know this is how you find out these things. It is important because now it eases the blow. It eases the pain. Rather.
For those of you that don't like to read, the IRS has a wonderful, when you go to their website, they have they have videos. No. They have everything on videos.
Oh, really?
Yes, honey. I watch them all the time. They have everything on it. They're wonderful. They break it down for you, second grade English, no big words, or the gig economy, all of that. Everything is on video.
You see that? That's excellent. I didn't even know that.
Yeah. And there's a couple of really good videos on there too that I like.
Okay. I gotta check out the IRS website just for my own personal knowledge. You know, you can't go wrong there. Oh my God. This has been so good. I mean, this is so good. I'm just so in tune to it. But I hope that, no, it's not that I hope. I know that this information is going to help somebody. You know why I know? Because it's been a fight trying to get this. We had some challenges getting this show on.
Yes, we did.
I mean, the computer broke down and I had to take it to whatever Best Buy, the Geek Squad. And I'm like, this has never, just all kinds of stuff. Listen, even before, it's just, this is the third take. Father, Son, Holy Spirit. 3.
Yes.
Come on now.
That's right. That's the Holy Trinity.
The Holy Trinity. Listen to me. He said this time is going forth. All right. In Jesus' name. So I really thank you. I got one more question that I want to ask though, before we end the show. Is explain to our audience what is a PTIN number, and why is it important for every CPA or tax account to have one?
Okay, a PTIN number is the number that the IRS gives to a professional who is preparing taxes. Now, there is a difference between a CPA, a tax preparer, um, and what was that you said? CPA, tax preparer.
An
There's
accountant.
an accountant. There's a difference. Um, an accountant, and but they all will have a PTIN number if they register with the Internal Revenue Service. That's how the Internal Revenue Service tracks what you do. Like, because it has to go on all of your returns, your PTIN number, and the state as well issues you a number that goes on all your returns, so they know who did what. Um, the thing is, um, the the difference between the three. A tax preparer, I'm a tax preparer. I will prepare your taxes. You bring me the information, I will put it on the form, electronically file it. You are not going to come to me with a shopping bag full of receipts and turn it upside down on my desk and say, here's my stuff, and walk out. You're not going to do that to me. You're not going to do that to me, because I'm going to explain to you what you can deduct, and you are going to keep your records at home. If you don't want to get QuickBooks, you don't have to get QuickBooks, which I love and I swear by QuickBooks. But you don't have to get it if you don't want it. You can get yourself a composition notebook and write down January, February, March, April, May, and write down how much gas you spent in January, and how much paper you bought in February, and how much. I don't care what your system is, as long as it's acceptable to the federal and acceptable to the state. You can have whatever system you want. And what you're going to do is bring me the numbers. At the end of the year, you're going to say, okay, this is how much I paid for this. This is how much I paid for that. And I'm going to ask you, do you have proof of this? Do you have this written down? And you're going to say yes. And I'm going to complete the return. And that's going to be the end of my job. A CPA is going to do business taxes, and not small business, not like me, not the gig economy. A CPA is going to do corporate taxes, and they're going to make much more money than I make.
Oh, okay.
An accountant is going to keep track of your books. They'll do taxes, but they're going to keep track of it. They're going to have the ledger. They're going to be the one that you're going to pay to put all of that stuff in. Gas this month, and and lunch with this person, and the person that notates that puts all of that stuff in, which is QuickBooks for me. But if you have a big corporation, you might want to have an accountant department that keeps track of different things. So the accountant, the CPA, and the tax preparer are all different.
Excellent. I just love the way you just break things down.
Did I clear that up for you?
Cleared it up.
But everybody that's doing taxes needs to have a PTIN, because the Internal Revenue Service, that's how they track you. That's how because you have to meet certain standards in order to get that number. The state requires that you do, what is it, 16 hours? I have to do 16 hours of training every year and pass the tests for each one of those classes that I take for the state before they issue my number, reissue my number, and pay my fee, of course, before they reissue my number.
Wow.
The federal also have classes that you can take, that you have to take prior to renewing your number.
That's excellent to know. That's excellent to know. So that when you're looking for somebody to do your taxes, now you know. Thank you so much for, that hour went by so quick. but it was a juicy apple.
Oh, is it over already?
It's over
I was
already.
having fun. I wanted to stay.
I'm telling you, I'm serious. Like that was so, it was just so good and it was so impactful. And that's what my goal is when I get on every week is to bring information that's going to transform the lives of people. People,
Very transformative.
because it helps to um, better your quality of life. And that's what it's all about. It's things that we do. We don't have to suffer. It's just that we perish for lack of knowledge. Isn't that what that's what the Bible says?
That's what the Bible says.
So I want to help impart this knowledge to you by sharing, you know, this information and bringing on experts so it can help you along in your financial journey. So with all that being said, I'm sorry, but I'm glad we had this time together. Okay, but I wanna just give you on different ways on how you can contact us. Do you wish to share?
Sure.
Go ahead, let them know how they can contact you, please.
The name of my business is God First Enterprises. I'm located at 147 Prince Street, which is right off of Flatbush Avenue, downtown Brooklyn, across the street from Junior's. My number is 718-909-6298. Again, 718-909-6298. I do virtual taxes as well as in person.
Love it. That's nice.
Oh, and I also do home visits for people that's homebound because yes, they have to do taxes too. So if you are homebound and you can't get out and you need to do taxes, I will make a home visit.
Oh, that is so nice. That's excellent.
Yeah.
That's you got it. So you may not even have to email me. She just gave you her information. So you have her number. And please contact her because she will get back to you. She is very efficient. That's why I love her. You know what I'm saying? She's very direct. She ain't gonna hide. She ain't gonna do nothing. No, she's gonna tell you like it is. And that's what you want. That's what you
And
want.
I'm also not going to do anything illegal.
Exactly. That's exactly why I love you because you ain't gonna do that. Okay.
I'm not doing nothing underhanded.
That's right.
So if that's what you're looking for, you can go to H&R Block. But if you want to learn and get it done right, then you can call me.
Exactly. Okay, there you go. So I'm gonna 800-339-4127. I want you to stay tuned. We come on every we go live. The show airs every Wednesday at 7 p.m. Our contact information, if you have any questions, okay, support at makesensewithyourmoney.com. Okay, that's the email. Our website address is www.makesensewithyourmoney.com. Check out our superhero university where you have access to all different type of courses and trainings if you want to learn and maybe start a new business and fix up your credit and all that kind of stuff. Check us out, www.makesensewithyourmoney.com. And also the telephone number is 800-339-4127. I want to thank you so much for tuning in with us. Oops. I want to thank you so much for tuning in with us. I appreciate you spending the time. And with that, we are going to say
Bye.
Bye. Take care.